In the sprawling commercial heart of Nigeria, a monumental structure rises from the Lekki Free Zone. This is no ordinary industrial plant. It is the Dangote Refinery, a colossal 20 billion behemoth of steel and concrete, conceived by Aliko Dangote, Africa's richest man. For years, Nigeria, one of Africa's largest oil producers, faced a crippling paradox. It exported crude oil. It imported expensive refined fuels, gasoline, diesel. That dependency created a lucrative market for international traders, for local importers, but it drained the nation's foreign reserves and left citizens vulnerable to volatile global prices. The Dangote Refinery was built to shatter this paradox. It was designed to be a game changer. It processes 650,000 barrels per day, one of the largest single-train refineries in the world, vast enough to meet Nigeria's entire domestic demand, with a significant surplus for export. Its January 2024 launch was hailed as a turning point, a declaration of industrial independence. The promise: transform Nigeria from perennial importer to self-sufficient refiner, then become a major exporter across the continent and beyond. But this venture challenged a deeply entrenched ecosystem. International oil traders, shipping magnates, local fuel marketers. They had profited for decades from imports. They controlled fuel flows, prices, and policy. The arrival of a domestic giant was an existential threat. The stage was set for a monumental battle, a high-stakes confrontation between a visionary industrialist and the established order. One man's audacious $20 billion bet is attempting to rewrite global fuel rules. It upended trade flows from Lagos to London. The Dangote Refinery has redrawn the energy map of Africa and the wider Atlantic Basin, creating new winners and losers in a multi-billion-dollar game. The fight for control has begun. Its outcome will echo across the globe, reshaping economies and challenging the long-standing balance of power in the world of oil and gas. The journey of the Dangote Refinery is a testament to the vision and tenacity of its founder, Aliko Dangote. The project is a fight against powerful mafias in the oil sector. Dangote says these entities are even more formidable than drug cartels. This is not just business, it's a personal crusade. He has invested billions of dollars and his reputation in what many called impossible. He vowed to fight until the very end, certain of victory. This is a high-stakes $20 billion gamble. The prize? The economic future of Africa's most populous nation, over 200 million people. Since operations began, the refinery has sent shockwaves through the established order. Traditional trade route: tankers from Rotterdam. Traditional trade route: tankers from Antwerp to the port of Lagos. That trade was worth an estimated $17 billion a year. As Dangote ramped up, it shifted the Atlantic gasoline balance. Vitol pivoted, Trafigura pivoted, BP pivoted. Those once suppliers are now major buyers of Dangote product. Tankers loading directly at the Dangote Refinery. The impact on the ground in Nigeria was immediate and visible. The state-owned NNPC had long held a tight monopoly. Dangote's entry shattered that monopoly. The refinery selling domestically triggered intense price wars. Whenever Dangote cut prices, importers followed at a loss. The market saw volatility and uncertainty. But there's the promise of lower, more stable fuel prices for Nigerians, breaking the cycle of scarcity and subsidy. We'll trace this drama: the money, the power plays, the geopolitics. How one project is reshaping Nigeria, influencing Africa, challenging European refiners. A single bold investment upends decades of trade and powerful cartels. The ripples from this $20 billion play are just beginning. The world is watching. The story of the Dangote Refinery begins not with steel and concrete, but with a vision taking root in the challenging terrain of the Lekki Peninsula. Before it became a symbol of industrial might, the site was a vast expanse of mangrove swamp, a seemingly inhospitable location for one of the world's most ambitious construction projects. Turning this waterlogged land into a solid foundation was the first monumental challenge. It required an unprecedented feat of civil engineering in the region. Millions of tons of sand were dredged and piled, slowly reclaiming the land from the sea, creating a stable base capable of supporting the immense weight of the refinery's complex. Machinery, storage tanks, sprawling infrastructure. This initial phase of construction was a quiet but relentless war against nature. It involved an army of engineers, surveyors, and laborers working around the clock under the humid Nigerian sun. The scale of the land reclamation was a project of immense proportions, a testament to the sheer will driving the venture forward. This was more than just site preparation. It was a powerful statement of intent. Aliko Dangote and his team were not just building on land. They were creating the very ground upon which Nigeria's future economic independence would be built. Every lorry of sand, every driven pile, a step towards turning an impossible dream into a tangible reality. The political backing for such a colossal undertaking was crucial. The Nigerian government, across successive administrations, saw the refinery as a strategic national asset. It aligned with a long-held political objective: to end the embarrassing and economically draining cycle of fuel importation. For decades, leaders had spoken of self-sufficiency, but progress lagged. The Dangote project offered a concrete path to that goal, championing industrialization and diversification, a private sector solution to a public sector failure. This support provided political cover and regulatory facilitation, but the path was far from smooth. Powerful vested interests had benefited from the status quo for years. Fuel importers, political allies. Together they formed a formidable opposition, working behind the scenes to create obstacles and sow doubt. From the start, the refinery was both an engineering challenge and a political battle. Dangote was not merely building a factory, he was challenging a deeply entrenched system, and every ton of concrete poured was an act of defiance against those who preferred Nigeria to remain dependent on foreign fuel. After years of construction, delays, and mounting anticipation, the moment finally arrived. Well, you know. In a grand ceremony attended by heads of state and industry titans, the Dangote Refinery was officially commissioned. However, the real launch was in January 2024, when the first crude oil began to flow into its intricate network of pipes and processors. This marked the official start of operations, a quiet yet momentous event that sent ripples across the global energy industry. The giant had awakened. The initial phase wasn't about full capacity overnight. It was a carefully managed process of testing, calibration, and gradual ramp-up, ensuring every component worked in perfect harmony. The first products weren't gasoline, that would later dominate headlines, but heavier fuels like diesel and aviation fuel. This was a strategic choice to stabilize initial runs and bring units online sequentially. The first cargoes of diesel were loaded onto trucks and ships, destined for the domestic market. This was a landmark moment. For the first time, large volumes of locally refined diesel from a private company entered Nigeria. It proved the $20 billion investment was starting to deliver. Market reaction mixed excitement and caution. Domestic consumers and industries dependent on diesel hoped for lower costs and better availability. Established importers watched with nervous apprehension. These first trickles felt like the start of a flood that could wash away their business model. Global traders analyzed product quality and logistics. The launch wasn't just Nigerian. It signaled a new, powerful player to the world. Transitioning from construction to operation tested technical and human capacity. Thousands of skilled engineers and technicians were needed. Logistics, receiving crude, processing it, storing finished products, and dispatching via sea and road required flawless execution. January 2024 was the culmination of a decade of planning, and the start of an even greater challenge: operating efficiently and profitably in a resistant market. The fight was just getting started, and the refinery's first operational breaths were taken in a tense, watchful atmosphere. As the Dangote Refinery moved closer to full operational capacity in late 2024, a profound sense of anticipation settled over the global fuel market. For decades, the trade route between Europe and West Africa had been a one-way street for gasoline. Refineries in the Netherlands, Belgium, and the UK had enjoyed a captive market in Nigeria, a reliable outlet for their surplus production. This trade, valued at a staggering $17 billion per year, was a cornerstone of the Atlantic Basin energy economy. With Dangote's facility poised to supply all of Nigeria's needs, experts began to predict the imminent end of this lucrative, decades-long era of European gasoline exports to Africa's largest market. The implications for European refiners were stark. They were facing the loss of their single biggest customer for gasoline. The structural shift was seismic. A market that had reliably absorbed millions of barrels each month was about to vanish, potentially creating a surplus of gasoline in Europe. This surplus would inevitably pressure refining margins, forcing some of the less efficient European plants to cut production or even face closure. Vitol, Trafigura, and BP had built lucrative businesses on supplying Nigeria, but the refinery's launch flipped this dynamic on its head. These firms, masters of adaptation, swiftly pivoted their strategy. Instead of selling to Nigeria, they now sought to buy from it. They recognized that controlling the outflow from this new regional supply hub was just as critical as controlling the inflow had been. These trading houses moved quickly to secure their positions as the dominant buyers. Their immense global logistics networks, vast fleets of tankers, and deep financial resources gave them a natural advantage, transforming from adversaries of Nigerian self-sufficiency into the primary conduits for its new role as a regional fuel exporter. They were positioning themselves to be the new kings of the coast. While the global trading giants adapted, Nigeria's local fuel importers faced a far more existential crisis. This entrenched group had built fortunes on the old import-dependent system. The Dangote Refinery was not just a competitor. It was a wrecking ball aimed directly at the foundations of their wealth and influence. The reaction was fierce and desperate resistance. These importers, whom Aliko Dangote himself referred to as a powerful mafia, allegedly began to use their considerable influence to undermine the new venture. They gambled that they could withstand the financial pressure longer than the new, debt-laden refinery, pitting the established, distributed network of dozens of importers against the centralized might of a single, colossal refinery. Ultimately, the importers' position was fundamentally weak. Their entire business model was predicated on a market inefficiency that the Dangote Refinery was specifically designed to eliminate. As the refinery consolidated its grip, it began to look outward. The first international sales marked a historic turning point. The initial export cargoes were targeted sales to Nigeria's neighbors: Togo, Ghana, Cameroon, Côte d'Ivoire, Tanzania. For the importing African nations, the availability of a major supplier next door was a welcome development. It offered the potential for shorter shipping times, lower freight costs, and a diversification of supply. The sales, totaling 456,000 metric tons of gasoline in the first wave of exports, were a clear signal that Nigeria was ready to claim its position as the new refining hub for the continent. The dream of a self-sufficient Africa, powered by its own refined products, was starting to take shape, one cargo at a time. The story of the Dangote Refinery is, in the final analysis, a story of transformation. In just a few short years, a single audacious $20 billion investment has fundamentally rewritten Nigeria's energy equation. The primary objective, to end Nigeria's humiliating and costly dependence on fuel imports, has been decisively achieved. The nation has transitioned from being Africa's largest importer of gasoline to its most significant exporter. The decades-long trade route that brought European gasoline to Lagos has been severed. The winners in this new equation are clear. Conversely, the losers are just as clearly defined. The once powerful cartel of Nigerian fuel importers has been effectively dismantled. The other major losers are the European refiners. Looking ahead, the future will be defined by the successful execution of expansion plans. The audacious plan to double capacity, 1,400,000 barrels per day. If realized, a world-altering development, a refining complex with global influence, elevate Nigeria to a global energy superpower, compete with U.S. Gulf Coast refiners, compete with Asian refining giants, African governments scrambling for long-term contracts, South Africa, Ghana, Kenya. This is a shift away from the volatile spot market towards stable, government-backed offtake agreements. But Aliko Dangote is right. The war is not yet over. Operational hurdles remain, and the old order mafias may still try to disrupt and profit. The path forward requires relentless focus and fighting spirit. The Dangote Refinery has permanently altered fuel market dynamics. It has demonstrated how a single visionary project can disrupt decades of practice and redraw the global energy map. The initial war for Nigeria's energy independence has been won. The campaign for continental and global dominance has begun. Ripples from this 20 play will continue to spread. The world will be watching as Aliko Dangote fights to finish what he started, securing his legacy, not just a refinery, but reshaping an entire industry.